Welcome to my channel. I'm Scott, and in this video I'm going to walk you through the process of valuing OSCR Health stock by analyzing their financial statements and dissecting their financial ratios so we can determine if it's a buy or a sell. Let's get started with the model. This is a mid-cap company, 4.1 billion market cap. They're trading at $19 a share and they have 219 million shares outstanding. OSCR Health is a healthcare technology company. It offers health plans to individuals, families, and employees. They used to be known as Mulberry Health. They changed their name to OSCR Health in 2021. They're headquartered in New York City. Let's look at their financials. The way you value a company is you estimate the free cash flows into the future, and then you discount those numbers back to today's value. That's what we're doing in this video. And free cash flow is cash flow from operations minus capital expenditures. Their free cash flow grew a lot from 2022 to the trailing 12 months, up to 1.2 billion. They're definitely doing something right. Net income is the profit or loss on the income statement. It's revenue minus expenses. That also improves a lot from negative 600 million to positive 100 million. Revenue is a sales for the company, and that more than doubles from 4.1 billion to 10.1 billion. Pretty amazing growth. We estimated 4 years of future free cash flows. We also estimated a terminal value to all cash flows past year 4, that's 18.8 billion. We discounted those numbers back to today using the weighted average cost of capital. We get a value of the company of $17 billion. We divide that by 219 million shares. And we get a calculated stock price of $75. They're trading at $19, so they're trading at a 75% discount. It's a really strong buy according to the model. This seems really undervalued. Get in now before it's too late. There are 11 companies in the same industry as OSCR, and if they have a number in red, they're worse than the median. If they have a number in blue, they're better. They don't spend much in CapEx, only 31 million. United Health Group spends the most, 3.7 billion. Debt to equity ratio looks pretty good, 0.2. For each dollar of equity, only 20 cents of debt. They don't pay a dividend. The top 5 companies do pay a dividend. United Health pays the highest, 2.7%. They do generate positive free cash flow, but a lot lower than the average, a little lower than the median. They rank 8th in market cap at 4.1 billion. They're trading at 3 times book value, 33 times earnings, which is the worst on this list. The worst if you exclude the NAs. They do have the best price to free cash flow, so that means they generate the most free cash flow relative to their market cap, trading about 3.5 times free cash flow. Price of sales is 0.4, which is equal to the median average. They generate 10 billion of revenue, which is a lot lower than most companies. And the stock has gone up a lot the past few weeks. It's trading between its 52-week low and 52-week high at 1877, 39% above the low, 31% below the high. If you put $10,000 into this company when they started trading, you'd be at $5,000 today, a 50% loss. But at one point, your $10,000 will be about $1,500. To summarize, I have them trading at a 75% discount, ranking 8 out of 10. Looks like a really good value short term. Also looks like a pretty good value long term as well, 7 out of 10. Really good price to free cash flow. PE is a bit weak at 33, so 7 out of 10. And financials look amazing, 9 out of 10. Free cash flow up 239% since 2022. Revenue up 144% in the same time period. Let's look at their 10Q. Here's their income statement. This is the first quarter of 24, first quarter of 25. Revenue up a lot from 2.1 billion to 3 billion. Premium revenue looks amazing, 2.1 billion to 3 billion. They have 46 million of investment income and only 4.3 million of services. Let's see if they give more detail on the revenue. They define their premium revenue. It includes direct policy premiums collected from members and the federal government. Assumed policy premiums, that's a policy written by another insurance company, and this company assumes the risk of that policy. That's known as reinsurance. They offer the Cigna and OSCR small group plan. Let's go back to the income statement. 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 Below revenues, operating expenses, 2.3 billion of medical expenses. That's to treat the patients. $500 million of SG&A, selling, general, and administrative expenses. That includes marketing. That went up a lot from $400 million. And only $6.7 million in depreciation and amortization. So operating expense is $2.7 billion. Operating income grew a lot, from $185 million to $300 million. They paid $6 million of interest on their debt, $2.9 million of other expenses. Their net income, $275 million. That gives them an EPS of $1.10. EPS is their net income over shares outstanding. 251 million shares outstanding. It grew by 20 million from last year. Let's look at their balance sheet. Their current assets, $3.7 billion. Current liabilities, $4.1 billion. So their current ratio below 1. That means they may need to add some debt to get through the next 12 months. Their biggest asset is cash, $2.2 billion. And they have $750 million of short-term investments, so nearly $3 billion of cash or cash equivalents. Long-term investments, $1.9 billion. That's also pretty big. That may be investments in other companies. So total assets, $5.8 billion, up from $4.8 billion. Liabilities, $4.5 billion. That's up from $3.8 billion. Their biggest liability is risk-adjusted transfer payable. You can see they don't have much debt, only $300 million. Assets minus liabilities equals equity, $1.3 billion of equity. They raised $3.9 billion from selling their business, and they lost $2.6 billion from running their business. So historically, they have negative net income. Let's look at the statement of cash flows. That improved from $630 million to $878 million, partially from higher net income, as you can see here. In their investing section, they purchased $336 million of investments. I'm not sure what the investments are. Let's see if they talk about it. Not much going on in the financing section. They had a cash inflow of $5 million. Most of that was proceeds from stock options. These are stock options by their employees. Let's take a look at the company on Simply Wall Street. Its last price, $19, $4.1 billion market cap, up 33% in the past week alone, down 2% in the past year. So it's still down for the year, even though it's up so much in the past week. You can see the stock has not done that well since IPO. It looks like it started out at about $25 in 2021, and it did horrible off the bat, falling to $221 at its low. That was in December 2022. It did run up to $22. That was at the end of 2024, but it's down quite a bit since then. But it has rebounded in the past week. Simply Wall Street does not value this company. 8 analysts priced this stock pretty much where they're trading at. Their revenue was really low in 2019 and 2020, only $400 million. Then just 1 year later, it grew to nearly $2 billion. That was at the end of 2021. 2022, $4 billion, more than doubled. 2023, almost $6 billion. And their revenue in 2024 was almost $9 billion. For the trailing 12 months, it's over $10 billion. Phenomenal growth. The CEO's salary went from $450,000 to $600,000. Total compensation, $900,000. Tenure, only 2.2 years. In the past year, there's been some insider buying and selling. A really big buy, over 1 million shares. 3/4 of the company is owned by institutions, 15% by VC and private equity firms, 7% by the general public, and 3% by insiders. Thrive Capital is the biggest shareholder, 15%. Thrive Capital is a VC firm in New York City. They own part of the Memphis Grizzlies. Josh Kushner founded this firm and Oscar Health. The next biggest shareholder is Vanguard, then BlackRock. Geode, 1.8%. TIAA-CREF, 0.88%. Mark Bertolini, 0.75%. Employee count went from 1,800 up to 2,700, but it came down to 2,400. And the ticker trades on the New York Stock Exchange. So if you want to get a copy of my discounted cash flow model, click on the video in the top right corner.